My name is Nick B, and let's jump into this week's futures overview. So, as always, starting with the Forex Factory economic calendar. Monday, we don't have much going on. Tuesday, 8:30 a.m. we have durable good orders. Then at 10 a.m. we have consumer confidence. Might not expect much. We'll see. Wednesday, we have preliminary GDP at 8:30 a.m. Thursday, we have core PCE. That's going to be a big one. There's, I want to say the expectations towards direction and trend on the market is going to be anticipated by PCE. We'll see, of course, followed by unemployment claims. Um, okay, FOMC member Mester. Nah, that's nothing too volatile. Friday, we have ISM manufacturing PMI and revised consumer sentiment. Let me just check. No bond auctions? No. Okay. So, moving on to the charts. So, it's going to be an active week, but really the PCE is what we're looking forward to. So, as always, starting with ES, let's go ahead and break this down. Let me go ahead and pull this up. First of all, let's clear the drawing set. Let's get rid of these alerts and pull this up on the yearly, 2-year daily. Okay, so what do we see? Clearly the trend is going higher, and again on the daily, all price has been doing is getting bought up at the 20-day exponential moving average. Again, ever since we broke out of this area 4630. So I'm gonna underline, the main levels, the main floors that are going to be big if and when price approaches them. So at 4630, we have a floor here at 4842. Again, I don't expect to see this, but if we do, it's going to start all with us breaking the 20-day on the daily, closing below it. And really, ultimately, it's, once we blow out the previous higher lows, then we can get the green light to feel comfortable to short. But not on the breakdown, because again, this is a bullish structure. The trend is your friend. So if we do start getting the breakdown, give me a retest of the breakdown and stay below the previous higher low, and then we can see that continuation higher. Otherwise, if we try to kind of bang it out for a break of the higher lows, it's heavily dependent on momentum, and especially what we've seen from last week. Reversals are still a thing in this market, so let's not get caught. And again, let's talk about the elephant in the room. It was a little bit not a surprise, but it was unexpected that Nvidia earnings alone took us out of the areas of ultimately what 49.40 back up to its all-time high. So that's super interesting. Let's go in for a closer look. Let's confirm also that the all-time highs now are at 51.23. As long as we can hold above 5100, we have that room to head on higher. And I think the new target to the upside, for me at least, would be 5200. And we're going to work it in 20-point intervals. Of course, it's too early to say what's going to happen in terms of up or down. We have to see, well, I do things very by the textbook. So I have to see, are we going to break down and solidify a resistance level, a support level into resistance, or are we going to break out and we're going to keep the Momo pushing towards the highs? We'll see. So let's underline the floor that we're currently in on the big picture. And this kind of confirms what direction, what trend we're going to take on, depending on these levels. And it stems from 48, 42. Let me just adjust this level. We were talking about it last week. Okay. And then again, ultimately the highs on a break of 51.23 and a half, we should get room to head towards 51.40, 51.60, 51.80, and then ultimately 5200 would be that upside target. But let's go in for a closer look, see what's going on the 4-hour. Again, keeping in mind the 20-day is our support. Let's also double check where that 20-day is. And it lines up how convenient at the $5,000 mark. Perfect. Perfect. Okay, so let's break this down to the 4-hour now. Let's take a look. Okay, So it seems like out the gate, they wanted to sell us, they bid us up a little bit, and now we're kind of having this slow meltdown. I would not be surprised to see us end up towards 50.60 or 50.65, which was last week's session breakout that led us to make the highs at 51.23 and a half. So if we do come down to this on the 4 hour, there's one of two things that are going to happen. Either we're going to bounce off of it, and it's again, we'd have to really wait for the break of the highs to confirm that we're going to go higher, or we break below 50.60, we get a close below it on the 4 hour, and that now opens us up towards the downside of, well, I would ultimately say 49.60. Um, but I can't ignore the lower high here at 50.60 with that's the original break. Then we have 50.28, 50.30 area. This is now we're talking about intraday levels. 50.30 breaks. We'll have room to make our way down towards 5,000 area. Again, on the daily, the 5,000 area is our 20-day EMA. Pretty convenient because once we do break the higher lows, oh excuse me, the lower highs of 5,000. Again, that's going to give us a little bit more confidence, but ultimately the higher low that I'm looking at is going to be 49.60. And I'm going to go ahead and place an alert. I'm not going to make it as a support resistance level, but that's, yeah, 49.60, 25 gives me enough time to see if it's signal worthy or not. But that's ultimately, going to confirm whether we can go lower or not. I'd expect us to break below 49.60, maybe come down towards 49.40, which was the original higher low that I was looking for a breakdown of. We never got it. We bounced. And then again, last week we came down close to it, but bounced out of that area. So if we do get a break below 49.60 and the 4 hour, 1 hour, especially if we can get a close below it, we may have room to come down now towards 49.40. Again, how convenient that our 4 hour 200-day EMA is roughly around that 49.40 area. So that confirms the basis there. Now, it's going to be important that we can hold below 49.60 to then feel comfortable taking an attempt on shorting the to the downside, because guys, it's pretty difficult shorting in a bull market, in a bull structure. You're, in a sense, you are going against, against the trend, and we're looking at this on the bigger time frame. On the intraday it's different, but that's kind of what I'm looking out for in terms of this week. So let's see, it's all going to stem from 50.65 depending on if we get to this area. So I also want to place an alert there as well. 50, yeah, we'll do 50.65, 75. Give me enough time to see the candle close either above it or below it. Again, if we close below 50.65, there's a good chance we'll see a pullback, not even just to 50.30, but very possible we see 5,000. That's going to be that pivot level on the daily. And if we break below 5,000, we're going to have probably that room to play to the downside. But again, let's talk about this in the sense of a trend picture on the big picture. In order for us to really, really be comfortable shorting this, we got to get that close below at least 49.60 on the 4 hour and ultimately stay below it so that we can end up heading below 49.40. And again, that opens us up down to 4900. This is a big what if. I know there's a lot of expectations also for this week that we may see that pullback because we couldn't quite continue going higher into Friday. But again, it's too soon to tell. For all we know, all this could be is just a simple retest of the previous session highs, and then we rebound, and we'll go from there. Let's take a look at this on the 1 hour. Okay, so on the 1 hour, it's already breaking down, right? So we're blowing out this support here of 50.92, ultimately 5100, I want to say. So below 5100, again, that gives us room to come down to, I won't even consider the 50-day EMA, but again, my eyes are on 50.65. That's the only reasonable and rational explanation why we're coming down, just to get a retest of this breakout. And again, if we can't hold it, okay, we'll see a little more spillage to the downside. But again, I want to reiterate that in this entire area, this is more so to day trade. This is more of a day trader, scalpers kind of market here. That's not really going to give us any sense of real direction yet. The real direction is either we break below, you know, 49.60, which are these higher lows, and then and as long as we stay below it, that gives us the green light to go lower, or we retake the all-time highs, and then price continues higher towards 5200. This here, you know, we have to see how it goes because there's quite a few scenarios that could play out. For all we know, also, if we break below 5065, we might end up chopping between this area here of 4960 and basically a 100-point range here. So we don't want to get caught in the chop as well because, you know, timing price action, not exactly my strong suite. So that's what we're looking for on ES. Moving on to the NASDAQ. All right, so let's maximize this. Let's get rid of all the old alerts. All right, let's blow this up on the 1 year. No, let's do 2 year daily. Not much of a difference, but okay. Still, we can underline some important levels. Okay, and again, to reiterate, this is a bull trend, this is a bull market, bull structure here. So for us to be wanting to short this, we gotta take out those higher lows. And it seems like every time we get to these higher lows, tell me how or why they're buying it. So let's see. I also read somewhere earlier that in terms of evaluation basis for Nvidia, because that was a bit of a, caught us a bit off guard last week, in terms of how strong that push back up to the upside on equities was. But in terms of valuation, Nvidia is as cheap as it was in November of 2023. That may be a good thing because that's literally about a month after we bottomed over in October 27th on the Nasdaq. And oh, it's right here. I have it. 1084, right? October 27th, November came around. So let's see. That's just something to keep in mind. Okay, back to the charting process. So this is going to be our absolute baseline support again because we kind of stuttered here a little bit and then we had that gap up, and then when we broke out, we never really retested that area. Fine, that's okay. Let's just mark off this all-time highs over here at 18,144.75. And again, my main focus is going to be the 20-day EMA on the daily right now. That is over at 17,725. I would genuinely not be surprised if they take us down to that level. And again, similar to what we just went over on ES, we're either going to bounce off of the 17,700 area and then start reclaiming 17.9, 17.8, 17.9, coming back up to 18,000, working our way up towards the all-time highs because in terms of upside, we need a break of the all-time highs, solidify that as support, and then we could go higher. If I do see that we keep holding 17,700, 17,750, it may be worthwhile to take along since, we're not really near the higher lows and price can show sustainability above that support. If we do break below 17,700, it's same song and dance like we've been doing for a few weeks. We're going to look at what our previous higher lows were. In this case, we wicked over at 17,368. That is the next confirmation for downside. Maybe we could ride it out earlier, but let's take a closer look on the 4 hour. Before I do that, I just want to see what this hiccup here was because this is a higher high. 17,165. Perfect. I'll leave that alone for now. So to reiterate, um, in terms of direction, well, we're narrowing down. It's not really below 1675 let me rephrase that. 1675 is just the base of where we broke out. It's going to be direction if we break below it, but we can catch it sooner depending on the previous higher lows. So let's break this down to the 4 hour and let's see what we got going on. So the 4 hour, unlike ES, similar to ES actually, is coming up on its 20-day EMA, and the 4 hour 20-day EMA is literally at 17,892, roughly your 17,900 area. Very fair. Was also a previous lower high from last week that we're essentially just retesting now the breakout. And I would not be surprised if we come down as low as 17,700 because after we broke out of 17,600, that gave us, that push to the upside. Now, let me just mark off this floor. No, you know what? It's going to be here. This is your real downside target if you start breaking below the previous lower highs. 65. Okay, let's make that yellow as well, because if that does break down, well, we're definitely going to come down towards 16,700, and then we have room to even see 16,350. We'll see. One second, guys. Okay. Okay, so again, the 4 hours really not telling us too much in terms of direction, although we have now identified the floor that price is really trending in between. So it's either we break 18,144.75 and we head on towards 18,200. And my upside target for NQ, I really would not be surprised to see 18,500. I think that's a piece of cake if, momentum can hold up and if risk decides to take on risk at these areas here, we'll see that push higher. Now, again, in terms of downside, we could play the higher lows, but on the big picture, what are we really doing? And to me, it seems like we're just retesting the previous breakouts of last week. And again, keeping in the back of my mind, to short in a bull structure, I mean, I want to do it a little bit safely and comfortably, a little bit more conservative. So I much rather wait for, the higher lows of 17,360 to get blown out, 370, and then we could target a definite, 100, points to the downside, aiming really at 17,165. But below 17,165, if price cannot get back above this level, we're again most definitely going to be looking at 16,700, 16,360, 350 area, all the way down towards that 1670s to 16,100 area breakout into the end of 2023. But we'll see. That's a bit far fetched. We got to look at what's happening in the now. And again, I want to reiterate, if we do come down towards, we're 30 points away from it actually. So if we do come down towards 17,900, again, it's either they're going to bounce us or we're going to keep on sinking lower, but it's only for the retest of the breakouts that we had last week. So let's look at this on the 1 hour and see what it's telling us. So again, similar to ES, NQ is breaking below the 1 hour 20-day EMA. We're right at the 50 now, and we're approaching the 17,900 area. If we fail to bounce off of 17,900, 17, if you want to be really specific, it's 17,892, but let's say 17,900 just so it's easier to get around. If we break below and hold below 17,900, we have all that room to come down towards the previous lower highs of 17,800 now for the retest of this breakout here. We never really retested this breakout. At the same time, also, if 17,800 decides to break down and we cannot bounce off of it, we have room to come down towards 17,720, 17,700 area right here. Now, a retest and a bounce off these areas, I'd expect us to retrace our steps back up. And again, for the Discord guys, the Guard Radio guys, for the signals guys, we'll catch that intraday. We'll be keeping an eye out, but I cannot call out exactly what's going to happen for the week. Just again, in a broader sense, we're looking for direction here. It's a bit of scenario work here. So I hope the levels can help you identify, which direction during the day we might take on. I'm nervous though that if we do end up in the areas of 17,900 all the way upwards of really even 18,060, yeah, I would say 18,065 down to 17,900. It's possible that we end up just chopping here until we get a move of either above 18,144 or we finally spill below 900. And again, we go for the retest of 800. Ultimately, I'd be eyeing 700 to the downside, 720 area before a bounce. So that's what we're looking for on ES. On the hourly, again, it's tough to tell here. On the big picture, this does look like just a nasty 300, 400 point range, but we'll see. We'll see what we get. Taking a look at the VIX is pretty mute, Again, blowing this up on the daily, we still have the 20-day as our support. So as I mentioned earlier, let me put ES on the daily as well. For all we know, we could just be coming down towards the 20-day, $5,000 area, and then $17,700 area, and we could just bounce off the 20-day on that daily. On the small time frames, we'll have to be very sharp in terms of trying to time the price action there. But Other than that, I mean, that's all she wrote. That's all I'm looking for. Let me check where the dollar is really quick. So the dollar was unable to close above 104. That's wonderful. We are right at it though. The 1 hour. Yeah, we're right on it. I do expect that if we can and do get above 104 and start shooting back up towards 104.55 area, which are the lower highs here. Well, first it would probably be 104.30, then 104.55. But if we do get back in that area, I'd expect us to see a little bit of more downside. Other than that, I mean, that's all she wrote. That's what we're looking for in terms of direction. Really quick, just to reiterate, it's either we blow below 17,165 and we can, as long as price stays below 17,165 on NQ, we should be comfortable shorting the rips up to the downside, targeting the previous higher lows. Or we break above 18,144.75 and we head up higher towards, I would say, 18,500. For the intraday sense on the NASDAQ, I'm really eyeing it. We can really just eye it off of the daily. The 20-day serves us as that middle ground navigation level. So we are kind of pulling back now. And again, if we do come down to 17,720, if we cannot bounce off this 20-day on the daily, most likely we're going to see that breakdown, and we could try to time a short down towards 17,370, which is our previous higher lows. But if we do end up getting a close above 700, 720, we should be able to retrace our steps back up towards 17,800, 17,900, 17,950, all the way back up to 18,000, then 1865, and then from 1865, really 18,120 to the all-time highs. So that's for the Nasdaq. To reiterate with ES on the daily, again, the 20-day is going to be our kind of middle ground level, which is the $5,000 level. But in terms of direction, it's either, we break below 49.60, these higher lows here on the daily, the 4 hour, the 1 hour, and that's going to give us room to come down towards 49.40, which if we can remain below that area, that's going to give us a green light to come down towards 48.44, ultimately eyeing 48.42, because that's kind of the original support area that's essentially holding price up here. You could see, ever since we broke out of that area, the 20-day has been a very solid support for us. So that's in terms of downside. Or we get a break of 51.23, and in 20-point increments we can keep targeting the upside towards 5200. Again, the intraday scenario for ES is we pull back on down towards 5000, and if we can bounce or close above that 5000 area, we may see price start to retrace steps back up, and that's going to depend on, after we get a close above 5000, can we retake the previous, on the smaller time frame, the lower highs of 5030. I think if 5030 gets retaken off of a bounce on 5000, that gives us the green light to come right back up towards the highs. And again, really quick, for for NQ, if we get a close above 17,700, 17,720, it's very risky to take a bite all long on off the 20-day. Something that would be a little bit calmer and would confirm that, that intraday bounce is going to be inbound is if we can at 17,700. One second, let me eye that level out, because that is a possibility. I would say 17,800 confirms that the dip is going to be bought and we're going to continue upside. Other than that, that is all she wrote. I hope you guys have a wonderful and a solid trading week ahead, and we'll see you into the week. Cheers.